Hey friends, thanks for joining me, Jim Baroud, to hear a few insights from leaders who represent our innovation ecosystem. Today's chat is with Lou Kerner, the founder of CryptoOracle Collective and Crypto Mondays, and Nisa Amoils, co-founder and managing partner at A100X Ventures, as well as Sal Ternullo, managing partner at A100X Ventures.
I am the founder of A100X Ventures. Sal is my partner. I've been investing in this space for the past 7-8 years. Prior to that, I was a traditional venture capitalist, which is where I met Lou at Scout Ventures back in the day. And prior to that, I was a securities and corporate lawyer. And then I also, in between then, went and worked for Barry Diller, investing in Web2 companies. So a total of about 12, 13 years as a venture investor. I also do a show on Bloomberg and Fox Business called The Business of Blockchain, and we film at the New York Stock Exchange. And we do short episodes about real world use cases and kind of counter some of the negative media that's happening in the space. And it's
negative media.
Yeah, we'll get to that. Nisa, we're going to come back to all that because you have an amazing background and you're doing some amazing stuff. But let's get through our introductions. Sal, go ahead.
Yeah, well, likewise, thanks to both of you for having me. I appreciate you taking the time. So as Nisa mentioned, I'm her co-GP in building A100X Ventures. We've been together now for the past 12 months on this endeavor. Obviously, she started the firm prior to me joining, but the last 12 months, we made a lot of progress and very excited about where the market's moving over the next 12 to 18 months.
Great. Lou?
I've been crypto 24/7 since June 29th, 2017, when I saw the crypto light. And what I saw was, for the first time in history, we have a tool set to solve for the community instead of the man in the middle who generally solves for himself. And today I'm a partner at a crypto fund of fund called Blockchain Co-Investors. We're on our third fund of fund, invested in 43 of the leading crypto VCs. And I'm also a community builder, most notably built Crypto Mondays, which is the largest crypto meetup in the world with 59 active chapters.
Holy cow. Amazing. All right. So Nisa, let's circle back to you. Talk to us about your career. I think you're a lawyer, so obviously.
Yeah. So as a lawyer, I'm obligated to say that none of this is financial advice, life advice, solicitation, or anything else. So just to get that out of the way. But yes, I did start off as a securities lawyer.
Okay, and then where did that take you? A securities lawyer, and then talk to us. I know you mentioned a bunch of things here in your intro. Give us a little more context and background and what's really excited you over the years.
Yeah, I mean, so I started out as an angel investor, then went into a traditional venture fund, and we were investing in all kinds of technologies. And the thesis was the convergence of some of this stuff that's happening now. And as a securities lawyer, I thought I really had an edge in focusing on blockchain because being able to pass on some of the things that then became illegal was really a superpower. And so I started investing just on my own outside of that fund into a lot of companies that are now unicorns. And then I did a stint at Dragonfly, and then I, had been running this fund, sort of like contrarian thesis, but focused on real world use cases and consumer breakout applications before that was really popular this year. And so that played well. And we're very bullish on continuing these breakout consumer applications. And we can get into that more in terms of like what we're focusing on now. But that was essentially the arc of the career.
Got it. And go ahead, Sal, talk to us about how you got to where you are now.
Yeah, happy to do that. So I've been in crypto my whole adult life, not to age myself here, but I discovered Bitcoin when I was 19 in 2012 on campus at Bentley University in Waltham, Massachusetts, just outside of Boston. I was a corporate finance and accounting background, and then ultimately did a master's degree in accounting as I tried to delay my entry into corporate America, really stemming from some of the roots of culture and ideology that backed Bitcoin at the time. But I ultimately started off at State Street within their technology audit function. So I had a really cool front row seat to look at traditional finance, plumbing inside out, auditing global services, which is their custody and asset administration business, first at the application layer and then full stack infrastructure. And in 2016, the chief audit executive there tapped me to build an emerging technologies team within the IT audit function to think about the future of technology audit as it relates to public cloud, which was emergent at that point for TradFi, machine learning and AI, and then blockchain as well. So we spent 2 years doing research and development focused on those core categories, and we're core contributors to projects like Hyperledger Fabric, which are largely on the permission blockchain side. And in 2018, I positioned and pitched the idea of building digital custody for Bitcoin and a spectrum of tokenized assets, which you may be surprised was not well received at that point. This was right after the 2017 kind of run up and fallout on the crypto side. And so I left the firm, went to market, joined KPMG, and co-founded their advisory business in the US, focused specifically on public blockchains with a thesis to institutionalize crypto as an asset class. And if you Google institutionalization of crypto assets, the definition actually populates from a white paper we co-authored with Coinbase in 2018, which is actually also how I met Nisa. She hosted me down at her show at the New York Stock Exchange to talk about what do we mean by institutionalization of this Wild West space. That business ultimately scaled to be greater than a $20 million consulting business focused on custody, cybersecurity, AML compliance, and some work in the internal audit space. And then in 2021, I was spinning out some technology and IP that was adjacent to the audit platform we delivered for the firm. And in the endeavor of chatting with friends on the buy side to pursue, a venture financing round, I ultimately got drawn to the buy side, and helped in launching a fund that was investing early stage across a number of projects in the industry. So with that fund under my belt, Nisa and I came together, joined Track Records, and are now building the future of A100X Ventures together.
Wow, excellent. Thank you. Lou, go ahead.
Sure. So I was a VC investing in tech companies founded by Israelis in 2013 when a friend called and said, hey, Bitcoin's a thing, don't be an idiot, click. And so the first thing that I often do when I want to learn about crypto is I'll hold a conference call and get 4 of the smartest people to teach me, and I bring an audience. So I got 4 guys, all billionaires now, on the call. This was December 2013. And I've done this more than 100 times with webinars. It's the only time that the Wall Street Journal live blogged a webinar I threw. And they live blogged it by saying, we're on a conference call being held by Lou Kerner, Wall Street's Bitcoin expert. So my first minute in the industry, I was anointed by the journal. And I spent a year going down the rabbit hole, maybe 10% of my time, but I did not see it until June 29th, 2017. And then, as I said, what I saw was for the first time we had a tool set to solve the community, but it was fuzzy. I was literally in a manic state for 3 months until I had published my construct called 10 Thoughts on Crypto after 3 months down the rabbit hole. And it ended up being the most read thing tagged crypto for 3 days on Medium, after which, according to Medium, I was the 3rd most influential crypto blogger in the world, which I say did 2 things. One, it made me a guy in crypto, which was awesome. And second, it proved the first of my 10 thoughts on crypto, which I still think is true today, which is that nobody knows anything.
Excellent. And talk to us, Lou, about from that time until building Crypto Mondays and all that as well, because I think that's really impressive.
We launched Crypto Mondays January 2018. I'd started some other meetups. I'd been a longtime meetup shareholder, and literally one day somebody emailed me, hey, you do meetups, we're a bar restaurant, if you want to do one on Monday, we'd be happy to host you for free. And I said, I thought about it 2 seconds, responded, thanks for your kind offer, but what I'd really like is 10% of the bar on every Monday till the end of time. And they said, great, when can you start? And that was Bagatelle, which was a sick place, downtown meatpacking district. And we had the first one, January 2018, which was the peak market cap day for 2 years. We had 300 people at the first one. I'd never had 300 people at a meetup before. The next week, we had 350 and 3 TV crews, decided to blow it out around the world, decentralize, you start your own one. And, it's hard for people to get their head around decentralized. We launched with no rules. After 3 months, we needed to institute one rule, which is still the only rule we have, which is for people who run the other chapters, which is you cannot email me and ask me permission to do something. What part of decentralization didn't you understand?
I love that. And now you built on that CryptoOracle collective.
Yeah. The collective is a decentralized Web3 advisory service. We started with 24 Web3 experts in July of 22. We're now more than 300. We have a growing roster of clients trading token on Base. And now we have so many experts, we can build our own stuff. And the first thing we built was an AI Web3 accelerator. And we just graduated cohort 2. Nisa, thanks for attending, and participating and being a really value-added community member. So thank you.
My pleasure.
Excellent. It's really has been impressive. And as you know, Lou, we met in Davos a couple of years ago, and I've been.
Yeah, I think that was the last time I was on your podcast.
That's right. That's right. we actually zoomed in from Davos, but I've been
on
really
the river.
delighted to be part of the collective, and obviously with the growth of that initiative. So let's talk about, obviously, crypto has had a ride here, right? And now it's surging. But give us some perspective. I know you just sort of alluded to it in some of your introductions, when it started, and take us through how we've got to today, whether it's crypto in general and Bitcoin. I'll let whomever wants to start give us some sort of context for those folks who aren't familiar with crypto or Bitcoin.
Yeah, maybe I can.
Yeah, go ahead.
I was gonna say I'll kick it off, and you guys can build on this. So, the roots of crypto really started way before the emergence of Bitcoin. It was foundational work in the academic space on distributed systems and on cryptography that really came together for the first time in a novel manner in the Bitcoin white paper that got pushed in 2008. And since then, we've obviously seen the emergence of an entire industry focused on these same core building blocks of cryptography and distributed systems. And over the first 6 years of the life of crypto, it was really all about Bitcoin. 2008 to 2014, Bitcoin was kind of the core focus. And it was really, to Lou's point, kind of a community and cultural phenomenon rooted in principles around sovereignty, around privacy, a lot of kind of things that have been tagged in the crypto anarchist vein. And then 2015 came, the white paper of Ethereum was published, and we saw a broader opportunity set where really a lot of the kind of foundational ideas that we look at today from an investment perspective started to emerge. And so 2015, I kind of mark as the dawn of Web3, which really is the space that we all work in some context. But since then, we've just seen a remarkable acceleration in the pace of progress and innovation that's happened here. And so, the 2017 cycle saw the emergence of the ICO and new fundraising capital formation mechanisms, whether they were securities law compliant or not. It didn't matter because these were open, permissionless systems. And a lot of the things that came out of that cycle are now real use cases that have applications around them today. So, it's when we look back at this in time and say, where did the roots of this whole space come from? It's academic work from the 1980s and 1990s that came together in a really unique way. And that's something that I think we'll talk about later too, of like convergence and what does that mean in the context of blockchain and AI. But really, when I look at Bitcoin as the beginning of this whole thing, it was the convergence of computer science work and academic work focused on these two core building blocks.
Thank you. Nisa, do you want to build on that?
So I can talk about the period after 2015 or where Sal left off, but basically the past 4 years have been, as you know, under a regulatory regime in the US that was really not favorable to the growth of the industry. We had a lot of choke point 2.0, court cases, and an SEC mandate that was really very large, bordering on whether that's okay under Chevron doctrine. And all of that is changing, as we've seen since the US election, right? So now we're talking about a potential Bitcoin reserve in the US, and the timing of that we can debate, but we've had record inflows on ETFs, like ever on crypto. We see more in the institutional adoption and the RWA narrative that's been around maybe for 6 or 7 years, but is really gaining traction now.
RWA means what?
Real world assets being tokenized on chain, and that could be everything ranging from, let's say, the dollar or stable coin to money market funds to venture funds to other more non-fungible assets like art and liquor and real estate and all of that. So I think we're going to just continue to see the growth there now. And we have a lot of regulatory tailwinds now that we did not have for the past 4 years. So I think that's really important. And we have an administration now that wants to see the US be a leader in these technologies. And so I think we have a lot to be excited about in this industry right now.
Great. But tell us, the previous 4 years, I can't recall, was the administration, the Trump administration, the first one, supportive? I can't recall. Again, you guys have a better sense.
Trump 1.0.
Yeah.
I mean, it was mixed, right? There were statements back then about Bitcoin being a scam and then buying, or creating NFTs and selling them. So I think it was really mixed. But I think it's definitely come a long way. And you've seen that with his own initiatives, right? And then all of the people around him as well. So.
Got it. And Lou, do you want to add to that sort of perspective, the history here?
Sure. From my perspective, my favorite all-time crypto tweet was from 2013. Some guy tweeted, "I can't believe I sold all my Bitcoin at 6 cents. It's 80 cents now." And and to me, that just reminds us that everyone, when they come to Bitcoin, when they see it, thinks that they're late. And in my view, it really hasn't even started yet. It really feels to me, I was there at the beginning of the internet. I was a Wall Street analyst at the time. I was the first analyst to pick up at a bulge bracket to pick up America Online in 95. And it really feels like, the pre-Netscape period of the internet, when the internet had been around for 25 years, it wasn't like it was new, but it was so hard to use and so complicated that nobody other than hardcore academics used it. And then we got the Netscape browser and things changed overnight because everybody could use it without having to read a book. And, literally for 30 years, we've been going up and to the right. And, that's where it feels like it is, for Bitcoin, it's, and the rest of crypto, it's still so complicated. It's still so hard to understand even what it is, let alone start to use it. Even for us who, have been using it for years and years and years, there isn't anybody who every time they send a transaction, before they send it, doesn't get a little twitch of fear that something is going to go wrong, because it's still so early, in all of this. But we're getting closer every day to that point where, the building blocks are now in place for this really to go mainstream, for that, next evolution, of the technology to make it so much easier for everybody to use. The last thing I'll point out, I was just mentioned, I was a Wall Street analyst. I left in January of 2000. Since then, I've put out 2 kind of Wall Street style research reports where I put out price targets. And again, this is not meant as I'm not getting a commission on anything. But just to give context, the first company I wrote on was oh my God, was Facebook in 2010, and that worked out well. And the second I put out a 10-year price target in January of 2021 of Bitcoin of $1 million. Just getting there with the simple math, at the time, gold was in round figures a $10 trillion thing. And I thought, in my view, if all Bitcoin is a store of value, and in my view, it's going to be a lot more than that. But if that's all that it is, I thought that it was a dramatically better store of value and that it would dramatically grow the store of value market. And if you thought over 10 years, the store of value market going from 10 trillion to 40 trillion and Bitcoin getting half of that, that's $1 million Bitcoin. And, I think there's a law called Amari's Law. He was a professor at Stanford in the 70s when he came up with it. And Amari's Law is the fact that the impact of all new technology is overestimated in the short run and underestimated in the long run. And so, my guess is as Bitcoin scales, it's going to go way beyond 1 million.
Yeah, but some people might ask, Lou, now we're at 90, at the time of this taping, $96,000, and it's just surged a lot, right? And again, I know there's no financial advice here, but some people are saying feels late, or this, how can this continue to go up? Or this is a momentary surge because of the excitement around the new administration. What do you say to? And what do any of you say to?
I say that the massive financial trend of our lifetime is indexing, because it turns out we all suck at buying and selling. And so the right way, all science will tell you the right way is just to buy and hold, buy over time, dollar cost average. I buy Bitcoin every day. I've been buying it every day for years. Yeah. And so, is it going to go lower? Maybe. Is it going to go down 50%? Maybe. Who knows? But, if you need the money in the next 6 months, then probably you should be putting it into Bitcoin. But if you've got a 5-year, time horizon, there isn't anybody in the world, other than, somebody who bought in the last couple of weeks, maybe. But, a few days ago, we were at a point where there was nobody who had ever bought Bitcoin who had lost money, who had held. Right. And so, the right time to buy Bitcoin is today, always. Michael Saylor has a great saying, which is everybody gets the price of Bitcoin that they deserve.
Yes, sir.
Any other comments on that, Sal and Nisa?
Yeah, I mean, I'll stay away from the price stuff, but like on a fundamentals basis, I positioned, 2018, the idea of institutionalization of crypto as an asset class. And I joke with Nisa, like I'm far better on the buy side as an early stage investor because I was always way too early as a consultant. And I think when we look back at this, the launch of the Bitcoin ETFs in January of this year will probably be the marking moment of the adoption curve towards real institutionalization of the asset class. And this is just a different character type and market participant than what we've seen in prior cycles, where they're looking at exposure to Bitcoin as part of a diversified portfolio construction. Fidelity is recommending 3 to 5% exposure in your retirement account. Those are long duration positions that are 20 or 30-year investment horizons, which, to Lou's point, if you exceed that 5-year mark, it is very, very rare, if any example in the history of Bitcoin, that you'd be down in that position. And so, I think it's just where we stand today on a relative basis. Yes, we're near all-time highs at Bitcoin being 96,000, but we're within the first inning of real institutional adoption here. And the next chapter will be defined not just by, ETFs and institutional investors, but also by corporates like MicroStrategy, which have been at this now for the better part of 4 years. We were KPMG's their audit firm, so it was interesting to see how the management team cared a lot more about the audit platform we were building once Michael Saylor started buying Bitcoin, but also sovereigns, as Nisa mentioned, right? If the U.S. government really does advance legislation and executive orders to build a strategic reserve, it's just yet another market participant that has a long duration perspective. And as we all know, there's a fixed monetary system in Bitcoin. And so we are approaching a moment in time where there will be a supply shock. And I think Michael Saylor says it correctly. You get Bitcoin when you deserve it.
I'll just add to that, well, certainly the event of the ETF, that did have a meaningful impact, undoubtedly. But I am here because, in fact, it doesn't matter what the government does. This is going to be a huge thing. It felt to me, and continues to, inexorable, regardless of what the governments do. Right? I say, Google and Facebook aren't allowed in China, and they're still really massive things. Even if our government does, for whatever reason, decide, you know what, we don't like this, this is still going to be a massive, massive thing. Yeah, and so I think when people look back, the moment where it became inevitable, I think people will look back and say when the white paper was released.
I would
Got
just
it.
say, I know we're only talking about Bitcoin right now, but there's so many other things going on as well that are exciting. And I do think if you look at historically, we're going to see the rise in other coins as well, or other protocols. There's going to be a few winners. I think that's coming. And I think the market may be miscalculating the timing, like on the Bitcoin reserve. So it may take a little longer to get some of these bills through because Congress has other priorities. So the stablecoin bill, the market structure bill, all of that probably is going to happen closer to the midterms, given the other priorities. So I think we're going to see the rise in other assets and other use cases, though a lot of builders in the space have been waiting for this moment to release certain things, and they've been building them for a while. And I think you kind of saw this with the election with prediction markets as like a use case where people did not even realize they were using a blockchain. And I think that's going to happen more and more in other areas like healthcare, like pet care, like, supply chains and climate and all these other areas where we see opportunity, which are not only financial services, which is a big one, but there's definitely opportunity elsewhere. And I think maybe, Sal, you can just touch on pet care.
Yeah, no, I'm happy to do that. There's a popular discussion track of what meme coins represent on like a speculative basis in the space. And over the last year, there's been a lot of attention drawn on that side. And, there is benefit and value to humor in society. And I like to look at the positive side of the meme coin space being that, which in many ways is best embodied for me of Dogecoin, which started off as truly a meme, ultimately accrued value, and then started to build utility behind it. And so there's a strong argument to say like there's both value and opportunity that sits behind the capture of value, which I think Doge did well. But in parallel to that, there's real fundamental use cases that solve for men in the middle and intermediaries in different industries. And one of them that we've seen more recently that's really exciting for us is a real fundamental use case in the pet care industry, which is building a project to go after both the product and service side of one of the highest growth segments of the CPG market. It's a project called Petastic, an animal protocol under the hood, backed by Nestle, which owns Purina and PetFinder.com. And so this is a project that's been building quietly over the past 3 years, real use case, huge market, high growth, and something that will come, more publicly to market in early 2025, both as a result of more comfort on the regulatory side, but also just the fact that the products have matured to a point where they're ready to scale, both on the user, B2C side as well as on a B2B basis.
So you can't tell us anything more about that. Just wait and see. Is that right? That sounds fascinating. I'm really intrigued.
I'll point to Nisa hosted Carlos, who is the founder of this project, Carlos Herrera, on her show, Business of Blockchain, and that episode will air in January of next year. And so I'll point to that episode. Carlos can share more detail himself, but it's really just a great example of like there will be real fundamental applications that make our life better, faster, easier, and create new experiences. And those are the things that will on-ramp, as Polymarket did, hundreds of thousands, millions of new users without having to deal with the complexity of setting up a self-custody wallet and dealing with seed phrases or mnemonic backups. And so, those things will come to light over the next 3 to 5 years. We'll see consumer apps that reach scale and truly make my life as a pet owner better, right? And that's the ultimate goal here.
Right. And also maybe make government more efficient one day, right? Maybe that will be one of the hopes of the, future administrations here and around the world. But let's just touch on the global
now we're getting you're mentioning Doge again, the Department of Government.
Yeah, we're back to
Precisely.
Doge.
Precisely. But around the world, can we just take a quick, sort of take on where it's working? What have we learned from other parts of the world, or what can we learn from other parts of the world who have been more accepting or innovative in the space?
Yeah, I think in places like Singapore or the UAE and Dubai and Abu Dhabi, it's driven a lot of economic activity. The U.S. government has pushed a lot of people offshore, and really slowed the growth of this technology. And hopefully, the new administration will do better. But the industry is moving forward with or without the United States.
Sal
Yeah,
or
I mean,
Nisa?
I think that point's spot on, which is part of the reason that the Trump administration has recognized the need to embrace innovation and entrepreneurship, early stage startup companies building, not just in the context of blockchain, but AI, robotics, in order to achieve a GDP growth rate that helps to get out of the debt situation that the US government is in. Um, but on an international basis, like the US has lagged on the regulatory front from almost every other major economic zone. So if you look at Europe, MiCA 1.0 has been in place for several years now. I think it covered about 60% of what they needed to cover, but in MiCA 2.0, they'll cover the remaining pieces. And for the 1.0, they covered stablecoins, which for the US in particular is a critically important national priority to facilitate the dollar dominance in the context of blockchain. But that story about Europe and progress on the regulatory front's consistent in the Middle East. It's consistent in Asia, Singapore, and so when we zoom out from just the microcosm in some ways of the United States, like we're materially behind on the regulatory side, which has this trickle down effect to entrepreneurs pursuing clarity, leaving the US, building elsewhere. And I think the pendulum is quickly swinging back in the other direction, where we will see founders relocate that have left the United States back to the US, and projects that have been building here quietly go public, not necessarily in an IPO capacity, but in the token launch fashion.
And
What
in an
about
IPO capacity too.
Yeah.
There's a lot of companies in our space that are geared up to go public next year. There's also a pickup in M&A activity, as we've seen. So I think that will be really exciting to watch in the coming year.
what about the Bahamas or Bermuda, and also let's looking south of our border and El Salvador's experiment? Can you opine on that?
Yeah, I mean, some of the offshore locations like Bermuda and the Bahamas were the first to advance regulatory frameworks similar to what we've seen in Europe and Asia. Um, and I would say like there was mixed results from that. Obviously, there were negative outcomes in the context of FTX headquartering in the Bahamas, having probably disproportionate impact on different political players in that country. But in the context of Bermuda, like Premier Burt down there, former client of mine, has been on one of the most progressive campaigns and has hit other friction points that are eerily similar to Operation Choke Point 2.0 in the US, where, yes, they had the regulatory framework in play, but ultimately the banks that exist in Bermuda would not bank companies working in this industry. I think the inverse of all of that is true in El Salvador and Latin America, in Argentina now as well, where you've not just seen progress on the regulatory side, but top-down buy-in from, the president or prime minister in those respective locations, which couples with a really intimate and everyday experience with the challenges around inflation and fiat currencies and the merits of Bitcoin and its design as a deflationary asset. So, someday we'll look back and what El Salvador has done here will be really kind of years ahead of the curve. And I think that moment's probably in the 2025, 26 timeframe where people look back and say, wow, they were so early, and look at the impacts that it's had on economic growth for the country.
Thanks for that, Sal.
Have you been?
I have not been, but it's very much on the list. That,
Yeah,
and as we were talking
I'm
on the
looking
way
for it.
in,
I haven't been either, but it sounds fun.
And
Yeah.
if we could, coming back to the domestic scene, if we could wave a magic wand for the Trump administration, what would we prescribe?
it's three components to me. And Lou and Nisa build on me or challenge me if you feel different. But like the legislative agenda has three core components that are really, really important. The first of which is the stablecoin legislation, a bill around stablecoins. And that's important on a national strategic basis. The second piece is around market structure. And all of these things already exist, right? In different forms and factors. They haven't been passed through Congress, but they exist in draft legislation. But stable coins, crypto market structure, and then ultimately whether or not the US government decides to view Bitcoin as a strategic reserve asset. Those three things bring the US on parity with any progressive regulator or country internationally. And so there's a lot more that can be done. Like we can pardon Ross Ulbricht and, we can do certain things, but it's where we go from a market perspective is largely determined by how far the gap is between what's been promised and communicated versus what's actually enacted through Congress. And so I think to Nisa's point, we'll see that over the next 18 to 24 months, maybe not as soon as some would hope, but those are kind of the three pillars that I see as most important.
I agree completely.
Yeah, I mean, the government, they should get out of the way, and if they can't get out of the way, create sandboxes so we can move forward and knowing that we're not going to be thrown in jail. Otherwise, we'll leave the country.
Got it. All right. That was informative. We have a lot of entrepreneurs who are listening in, so I want to make sure we give them some guidance. So just one thing, one tip for entrepreneurs who are looking to build in the crypto space. Nisa?
Yeah, I mean, so versus traditional venture, this space has a lot more volatility. It also has a lot more opportunity for breakout success. But I think you really, as an entrepreneur, you need to be flexible. You need to be able to pivot. A few months ago, I would have said the biggest tip is focus on UX, but now I think AI agents might solve that for a lot of people. But yeah, I mean, also I think like focusing on security is still very important in this space. Like Lou was saying, you're still nervous when you press the button. I think there's a lot of still big problems in crypto to solve, and go after the big problems.
Great. Sal?
Yeah, I mean it's a tale as old as time, but like for me, it comes down to perseverance. And I think Michael Jordan was one of my idols in the context of like, what does that actually mean? He had a quote: "If you run into a wall, don't turn around and give up. Figure out how to climb it, go through it, work around it." Which kind of builds on what Nisa was saying in some ways. Is like, so many amazing entrepreneurs that we've backed and frankly have been the biggest winners in terms of growth and valuation, et cetera, have just been people who are relentless. You get kicked, you're down over and over. You have to pivot. Product market fit's not an easy thing to find. People talk about it like it is, but it comes down to like the gritty, perseverant entrepreneurs who ultimately make it. And sometimes that's not an endeavor one. That might be an endeavor two after you've already, had a failure. But that's really the crux of what we see as like, the people that ultimately move on to win in a unicorn capacity versus not.
Lou?
Just to build on them, I say it what they're effectively saying in one word, which is urgency.
Got it. Okay. And what about for anyone looking to invest in crypto or Bitcoin? Any quick tips?
I think you should replay Lou's clip from earlier because he basically hit on every point. We truly are not offering investment advice, but my personal behavior has been the same as Lou's. It's every single day over a 7-year period of time, DCA, catch the average of the market, and look at this on a long duration basis, 5 to 10 years. Pretend as though your exposure is part of your 401k. And yes, if you exit on a short-term basis, again, you will pay short-term capital gains tax. But the reality is, like, if you look at it on a long
or they'll
duration,
have a loss more likely.
or loss, right? Or loss. And you said that as well. The hardest part is holding, which a lot of people talk about now. But I think that, the best advice is you get to a point where you're informed, you're high conviction, you understand the merits and benefits of Bitcoin as an alternative store of value to things like gold. And then you build a position slowly over time that's consistent with your risk tolerance. And you look at it on a long duration, 5, 10 plus years.
for me, the tweet of my own that I retweet most often is the 3 best return on invested time in my life. Number 1 is wearing a helmet because I've totaled 2 motorcycles. Number 2 is flossing my teeth because I've never had a cavity. And number 3 is learning about crypto.
That's
Got
great.
it.
Well, I think only my poem can top that. Do you want to hear it?
You know what? Let's do it.
Okay. In the realm where AI and blockchain meet, a tapestry of code and verse does greet. Blockchain, a ledger, immutable and clear, records each word, each thought we hold dear. AI, the mind that learns and creates, crafts poems anew, reshaping our fates. Together they dance in digital embrace, a fusion of art in a boundless space. Decentralized voices echo through time, immutable verses in rhythm and rhyme. In this new era of tech and art blend, a future of creativity without end.
I love that. That's beautiful. Thank you, Nisa. All right. So why don't we go to Sal? And Sal, you mentioned Michael Jordan as far as your saying. Lou, did you have anything you want to end with?
I have a poem which is a quite famous poem, which I think is also quite apt for entrepreneurs, and that's if. So I'll read first is first stanza. If you can keep your head while all about you are losing theirs and blaming it on you, if you can trust yourself when all men doubt you, but make allowances for their doubting too. If you can wait and not be tired by waiting or being lied about, don't deal in lies, or being hated, don't give way to hating. And yet don't look too good or talk too wise. And it's basically all these things, which at the end, if you can do, then you'll be a man, my son. And I think if you can do all the things in it, you'll also be a more successful entrepreneur.
Wonderful. This has been great. I want to thank all of you for sharing your wisdom. Thanks for joining us. I hope you enjoyed the show. Please like it, leave a review, and subscribe. See you soon.